In a world full of noise, very few investors speak with the kind of clarity, results, and honestly, the longevity of Stanley Druckenmiller. I mean, this is a guy who makes Warren Buffett look like an amateur. Just kidding. Kinda. We're talking about someone who's averaged over 30% annual returns, forget this, over 3 decades. That's not a typo. 30% every single year. He's like the Beyoncé of the investing world, just consistently killing it no matter what the market throws his way. And the best part, he didn't lose money in any of those years, not even once. It's enough to make you want to grab your piggy bank and beg the man to be your financial advisor. So today we're going to break down the top 10 investment principles that made Stanley Druckenmiller a legend. And forget everything you think you know about investing, because this is billion-dollar wisdom coming your way. Now, most investors, they're kind of like that friend who shows up late to a party when, well, all the good snacks are already gone. They're stuck reacting to the market, always chasing the latest trends. Druckenmiller, he's the one throwing the party, and he's not interested in what already happened. He wants to know what's going to happen 18 to 24 months down the line. He's basically trying to predict the future, but with, fewer tarot cards and way more financial statements. And here's the thing. He's not looking for a perfect prediction. What he's really after are those opportunities where the consensus is just flat out wrong. Because, as he says, being right is only half the battle. Being non-consensus right is what makes the big money. In other words, if everyone agrees on something in the market, yeah, it's probably already priced in. It's like going to a crowded tourist trap and expecting to find a hidden gem. You gotta go where the crowds aren't. All right, let's talk about conviction for a minute. Now, most financial advisors will tell you to diversify, diversify, diversify. Don't put all your eggs in one basket, they say. And hey, to be fair, that's not bad advice for most people. But Stanley Druckenmiller? He's not most people. He's the kind of guy who's been known to put a significant chunk of his portfolio into just a handful of ideas. He's basically playing high-stakes poker. And he's not afraid to go all in when he sees a winning hand. Now, before you run off and bet your life savings on one stock, just remember this. Druckenmiller's conviction comes from deep research, rigorous analysis, and a serious understanding of the markets. This isn't about getting lucky. It's about having enough confidence in your own judgment to swing for the fences when you see an opportunity others might totally miss. All right, folks, let's talk about being adaptable. You see, in the world of investing, being a one-trick pony just won't cut it. It's like trying to play every song on the guitar with just one string. You might hit a note or two, but you're missing out on the whole symphony. Druckenmiller gets this. This guy trades everything. Currencies, bonds, commodities, you name it. He's like that friend who can speak 5 languages fluently, and you're just sitting there trying to remember how to say hello in Spanish. The point is, don't limit yourself. The market is a dynamic, ever-changing beast. One day, tech stocks are soaring higher than Elon Musk's ego, and the next day they're plummeting faster than a SpaceX prototype. You've got to be ready to move with the flow, to chase those opportunities wherever they may be hiding. Druckenmiller's philosophy is simple. Follow the edge, not the asset. Don't be afraid to venture outside your comfort zone. Who knows, you might just discover your next big win in the most unexpected places. They say you can learn a lot from your mistakes, but let's be honest, wouldn't it be much better to learn from someone else's? Enter the mentor, the Yoda to your Luke Skywalker, the Dumbledore to your Harry Potter, the Oprah to your... Well, you get the point. Now, Stanley Druckenmiller didn't just stumble upon his investing prowess. He had a mentor, a true titan of the financial world, George Soros. Working under Soros was like getting a PhD in market wizardry. It was an experience that shaped Druckenmiller's mindset and taught him the importance of thinking differently. Imagine being in the room with these two, the ideas bouncing off the walls like those ping-pong balls in a lottery machine. It must have been intense, exhilarating, and probably a little bit terrifying, like watching a financial Wimbledon match with billions of dollars at stake. But that's where the magic happens, my friends. When you surround yourself with brilliant minds, you can't help but absorb their knowledge and elevate your own game. It's like playing basketball with Michael Jordan. Even if you only last 5 minutes before collapsing from exhaustion, you're guaranteed to pick up some valuable skills. Okay, let's talk about risk management. Now, I'm not talking about the kind of risk management you need when trying to explain to your significant other why you accidentally bid $5,000 on a ceramic cat figurine on eBay. No, we're talking about investing risk, and when it comes to investing, position sizing is king. You see, it's not just about picking the right stocks, it's about how much you bet on those stocks. It's like playing poker. You might have a killer hand, but if you bet all your chips on the first round, you're out of the game before you can say royal flush. Druckenmiller understands this better than anyone. He knows that even the best investors are wrong sometimes. The key is to manage your losses when you are wrong and maximize your gains when you're right. It's about finding that sweet spot between being too cautious and being recklessly bold. Think of it like baking a cake. You wouldn't put all the batter in one tiny cupcake liner, would you? No, you'd spread it out, use different sized pans, maybe even get a little experimental with a bundt cake or two. Investing is similar. You diversify your risk by allocating your capital wisely. All right, folks, let's talk about emotions. Not the kind that make you cry during a Disney movie, but the kind that make you cry when you check your portfolio. See, Druckenmiller, he's like that stoic friend who never cracks a smile, especially when it comes to investments. Why? Because he knows that getting emotionally attached to a stock is like getting attached to a lion. It might be exciting at first, but it'll probably end in tears. Druckenmiller's secret sauce? He's mastered the art of the quick cut. You see, most of us, we fall in love with our investments. We think, oh, it's going to go up, it's got to go up. But Druckenmiller, he's not afraid to say, you know what, this ain't working out, and bounce. He's like that friend who ghosts you before you can ghost them. It's brutal, it's efficient, and it saves you a whole lot of heartache in the long run. Remember, in the stock market, as in life, sometimes the best move is to just walk away. Now, if there's one thing Druckenmiller is good at, besides making money, of course, it's spotting trends. He's like that friend who always knows about the cool new band before they're cool. Everyone else is still listening to the same old stuff, but he's already on to the next big thing. Take AI, for example. Remember when everyone thought it was just sci-fi nonsense? Well, Druckenmiller, he saw the potential. He was like, hold my beer, I'm going in. And guess what? He made a killing. See, Druckenmiller understands that the world is constantly changing and that to stay ahead, you've got to anticipate what's next. He's not looking at what's hot right now. He's looking at what's going to be hot tomorrow, next month, next year. Now let's talk about sheep. No, not the fluffy kind that graze in fields. I'm talking about the kind you find on Wall Street, the ones who blindly follow the herd, even if it means running off a cliff. Druckenmiller, he's more of a lone wolf. He's not afraid to go against the grain, to zig when everyone else zags. You see, he understands that the market is driven by fear and greed, and when everyone starts believing the same thing, that's when things get dangerous. It's like being in a crowded theatre and someone yells fire. You don't want to be the one stuck at the back trying to follow the herd. Druckenmiller, he's already planned his escape route. He's looking for the exits, the unconventional paths that others are too scared to take. You know, in the world of investing, there are two types of people, those who make money and those who are about making money. Druckenmiller, there's the real deal. But even he'll tell you, it's not about being right all the time. It's about surviving the times you're wrong. And that's where capital preservation comes in. See, in the market, you don't have to swing at every pitch. Sometimes the best move is to just stand there and watch the bad pitches go by. Druckenmiller's got this rule. Cut your losses quickly. Don't be a hero. Don't get stubborn. You see a bad trade going south, get out. Don't wait for the market to turn around and prove you right. Because here's the thing. The market doesn't care about your feelings. It doesn't care about your ego. It's just going to keep doing its thing. And if you're hanging on to a losing trade, it's going to take your money and laugh all the way to the bank. You ever notice how some people, they achieve a certain level of success and then they just stop? They get comfortable. They think they've learned it all. Well, Stanley Druckenmiller is not one of those people. This guy, he's a learning machine. He's constantly reading, researching, talking to experts. He's like a sponge, soaking up knowledge from every source he can find. And you know what? That's what separates the good investors from the great ones. the willingness to keep learning, to keep evolving, because the market's a constantly changing beast. What worked yesterday might not work tomorrow. So you got to stay ahead of the curve. You got to keep your skills sharp. You got to be like, what's that saying? A mind is like a parachute. It only works when it's open. Stanley Druckenmiller's genius isn't just in his trades, it's in his mindset, forward-thinking, conviction-driven and laser-focused on both reward and risk. He's like a chess grandmaster, always thinking several moves ahead, always anticipating his opponent's next move. But here's the thing about Druckenmiller. He's not just playing against other investors, he's playing against the market itself. And the market, my friends, is a formidable opponent. Success isn't about getting every call right, it's about managing your conviction with discipline, detachment, and a lifelong pursuit of insight. It's about knowing when to hold them, knowing when to fold them, and knowing when to walk away from the table altogether. If you found value in this breakdown, hit like, subscribe, and drop your favorite Druckenmiller quote below. Remember, your mindset is your portfolio. Invest in both.